for the skeptics that hear that, oftentimes you'll hear them say, crypto is just repeating the past mistakes of financial markets that we've repeated over hundreds of years or whatever. So my question to you is, what of that entire world that you just described is uniquely interesting for those that are listening from the TradFi world that are saying, what's going on in the DeFi world, what's going on in the crypto world that's actually uniquely new and interesting and innovative that the TradFi world might be interested in adopting? Because it feels like, right now all everybody can talk about is stablecoins. That's obviously one that's hit a lot of momentum. But what else in there is really new and innovative that can be actually transferred into the TradFi world?
It's a good question. And I think there's often a lot of pressure from commentators in the TradFi space to say, you have to blow them away with something that's 10 or 15x to get, to even be allowed to exist. And I don't think that's the way innovation works. But I would say stablecoins are a tremendous innovation. I don't know that I need to kind of relitigate why they're important. But if we look at some of the other benefits from doing this on chain, I think transparency is really paramount. So the fact that our loan book is on chain, so you can always check the performance and how many loans there are, validate that they're out there. But moving beyond that, you end up with better liquidity by doing it on chain. So the fact that you can have secondary markets through things like Uniswap or other kind of swap protocols, I think is a big advantage. And the fact that your assets become kind of portable across DeFi. So I think that composability is a big it's a big word that means a lot of things, but how I think about it is it encompasses things like secondary liquidity. That's really important. It's really hard in TradFi, particularly in private credit. Private credit, a lot of that just trades OTC between banks, whereas now you're able to have these products that can trade fractionally on chain. And anyway, just to keep moving in terms of the utility side of things, as an example or a bit of a case study, so we have Syrup USDC. We launched that less than a year ago. It's now got over $1 billion in TVL, but it's permissionless, which means you can push it out into any kind of DeFi integration. So where is it used today? Secondary markets, so you can exit the position instantly. You don't have to wait to redeem. You can use it as collateral to borrow and kind of lever up your position. Now, TradFi might say this is actually a horrible use case. You shouldn't be levering things. But if we look at the history of levered returns, right? Like where does private equity sit? And then the other one is, hedging interest rates. You have something like Pendle where you can say, I actually just I'm comfortable with this current return. I want to lock it in. And something like Pendle allows you to do that. These are all products that there's no specific product for that in TradFi. There's just various fragmented desks and traders that you have to go to for that.
Yeah, totally. Yeah, it's interesting. I mean, when you look at the history of financial crises, it feels like one of the key catalysts of them to really accelerate is just counterparty risk and not knowing who your counterparty is and rehypothecation of assets. And so I'm curious if you've seen any evidence in this world that we're in of just open source blockchains where you can see your loan book, to your point. Do you see that as the potential for at least solving or improving that dynamic of just the fact that you know your counterparty, you know what their exposure is, can just overall lessen the temperature during those heated moments?
I think so. I mean, we had a borrower the other day, they post Bitcoin to us and borrow dollars, and they said, this is the address we thought the Bitcoin was being held at. Seems like the Bitcoin's moved. Can you tell us where it is? And so we gave them an updated report of where their collateral's sitting. But imagine you couldn't conceive of that in traditional finance, right? Because it would just be a ledger entry where I tell you, I've got your Bitcoin in an account, but I can't actually ever prove that it's there until I return it to you. And so in that way, most of TradFi is actually just built on layers of counterparty risk, where over time the players have become such behemoths that they're single A, double A rated, and so you just take it for granted that they're going to be there until you have some kind of spectacular tail risk event, and one of them is not. That makes them in the long run, kind of brittle systems. And so I think that's the opportunity for DeFi and for doing this on chain, is that you can end up with a system that is more able to withstand those kind of shocks. There's no like JP Morgan who can collapse and take down the entire crypto system. It'll survive in the same way that it did after Alameda and all these other players kind of went under in 2022. But I do think that it is really important to have that transparency. And I think over time, that'll be reflected in effectively lower costs of financial products. On a historical trend, finance takes up, in my mind, too much a part of the overall GDP.
Yeah.
You know, I think historically it was average was like 5 or 6%. Now it's closer to like 10%. And I think that's largely reflective of the fact that you've had regulatory capture, too much industry consolidation. And so you've basically had profit taking at the expense of consumers. And so if there's one positive benefit we see over time from doing this on chain, it's that you see finance being a smaller percentage of the overall economy.
Yeah,